Good afternoon. Welcome to our weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With us is University of Missouri livestock analyst Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
Plenty to talk about this week as it comes to trade and markets and those types of things. So let's get things started and wrap up what happened this week in the markets.
Yeah, if you look at animal markets, it's nice to be talking about some higher prices this week across the board. We start on the cattle side. Fed cattle prices up nearly $4.50 this week on some pretty late trade in the week, while we saw on the feeder cattle side also strength this week with feeder cattle trading 3 to 7 higher. If we look on the future side, live cattle were $2.50 higher in that current contract for the week. We started a little weak early in this week, but finished with some strength. The same can be said for that current feeder cattle contract that also closed $1.50 higher for the week. On the choice box beef price, we were actually down nearly $1 this week. Not a lot of change. That leaves us over 9% below where we were a year ago at this time. If we change and look at the pork markets, live hogs up every day this week, $3.25 higher for the week. You look at that current lean hog futures contract, it also traded $3.50 higher this week. So strength in both cash and futures on the hog side. The pork cutout value was $1.50 higher this week. We got strength in both hams and bellies this week. It leaves that pork cutout value 14% below where it was a year ago at this time.
Scott, we definitely have had some fairly decent news when it comes to livestock. It seems like the livestock sector is absorbing some of this trade talk volatility fairly well, at least for the most part.
Absolutely. We got monthly trade data this week, and although we talk a lot about the trade rhetoric and some of the potential negative implications if we get large tariffs in place, the data that we've had through April now has all been positive. The April trade data came out this week. We ended up with total exports of fresh and frozen beef 15.2% higher than a year ago at this time. You look at that Japanese and South Korean markets, some very good news there on both fronts. The value of beef exports to Japan was 23% higher than a year ago, while we ended up with South Korea 74% higher than where we were a year ago at this time. So certainly has been a very good April in terms of beef trade. And even on the pork side of the ledger, we were 18.4% higher in April on pork exports out of the United States. Mexico was very important to the growth that we saw in April. So despite, again, a lot of that rhetoric relative to Mexico, we've seen a lot of strength there. The combined beef and pork exports, highest ever in April of 2018 at over 800 million pounds. So a lot of good news on the trade side this week, which we knew we needed given just the growth in domestic production.
I think as you take a look at those numbers, one of the big numbers that jumps out of me on the pork side of things is there's a lot of pork going to Mexico.
Absolutely. If you look at Mexico, 36% of everything the U.S. shipped in April went to Mexico. So that's a very big market for us as we look ahead.
Talk to me a little bit about how the sectors are faring when it comes to this increase in production growth and being able to find markets and making sure that we have more product leaving the country.
Yeah, so if we look at January through April data that we have, we can talk about beef production being 315 million pounds higher, while on the other end of the spectrum, we have chicken at 392 million pounds higher relative to a year ago. Pork sets up there pretty close to chicken at 389. When we look at what's been happening on the export front, we've been able to export about 36% of that additional beef production outside the United States. All right, so two things here we can talk about. Number one, the remaining 60 some odd percent either goes into freezer stocks here or is consumed, and we've seen a little bit of consumption increase. But frankly, it's nice that we were able to move 36% of that additional production outside the United States. So we're continuing to see growth on the pork side. Even a little better news here. We're talking about 43% of the pork production that's now being exported, or the pork production growth being exported. On the chicken side of the ledger, we don't talk much about chicken, and chicken's certainly been slow on the price side. only 16% of that 392 million pounds of additional chicken production has been able to leave the United States, which doesn't bode well in terms of what happens on the domestic front for chicken.
I have a question as it relates to how all of these markets interact together. When we think about the consumption or maybe prices, retail prices domestically, if we're not seeing enough of the chicken export the country, the prices drop at the meat case, does that also potentially pull down beef and pork prices as well? Because getting into that competitive factor?
Yeah, absolutely. So we see those products as substitutes for each other. I will sometimes argue they're perhaps less substitutable today than they would have been 10 or 15 years ago, but I didn't say they weren't substitutes. And when you get varied price differences, it certainly gives maybe restaurants a chance to feature some products they don't normally feature. And that might be featuring of things like chicken wings or other chicken cuts at the expense of more traditional products on the menu that might be beef and pork. So we do see those trade-offs happen, and all of the sectors depend on one another to a certain extent.
All right, let's talk a little pork. Fair to finish returns came out this week for May. How does this month compare to the other few months that we've had so far this year?
Yeah, so when you look at May, we do talk about May being in, or Iowa State University released these this week, 80 cents a hog losses in May. That's nice relative to the larger losses that we saw in March and April, but it's still a loss. And maybe more important to that mix is May tends to be one of the top profitable months for the hog industry. It usually over the last 20 years has been between the third and fourth most profitable month that we see out there. Having this May in the negative makes me a little worried about what happens the rest of 2018 for pork producers in this country.
Does it put pork producers even more on the defensive when it comes to risk management and protecting potential profit margins?
Well, I think it certainly ought to be a wake-up call that I think when you look back at 2017, we were worried about profitability, and it ended up being a much better year than we anticipated. We sat here in 2018, and now we're already with some red ink, March, April, May, and you kind of worry about the rest of the year. Don't think every year is going to be like 2017, I guess is my point. And using some risk management tools where you can to help reduce some of the red ink that we might face in the industry, I think is really important right now.
I don't think we can get by any week right now as we have these conversations about tariffs and trade and the impact that it could potentially have on livestock producers' profitability. What are some things and how do we continue that conversation and things to think about when we're looking and nothing but trade is in the news?
Yeah, so those details are really important, and it takes time for us to for everyone to understand the exact effects of any kind of barriers that might be put in place. We know Mexico said we're going to start here with a 10% tariff on pork from the U.S., growing to a 20% tariff. We'll have to wait and see the exact details of how all that's implemented to know the real effects, let's say, on the hog industry in this country. But it just adds, and again, I'll talk about it as binary risk, if you will. It's 0-1. We either get big effects or we probably get, frankly, not very big effects. It all depends on exactly the implementation of some of the discussion related to tariffs that we hear today.
I know we get nervous about it, but I think about Japan, and we saw that increased tariff on beef, but we haven't really seen too much of a slowdown on product going into the country, even with that 50 cent tariff or 50% tariff.
Correct. And I think it reminds us, number one, we have seen global economic growth that I think is important to meet demand. And even in countries like Japan, I think that might be a little bit important to what's at play. When I think about beef markets in particular as well, I think there are some countries that certainly show a preference to U.S. beef products, likely a higher quality than they're able to get from other countries in terms of substitutes. And so I think that's been important to some of the growth that we've seen in a country like Japan in particular, as well as South Korea. So in many ways that may bode well for us that we hold strength despite those tariffs. But I remind us if tariffs were to be lower, we'd move even, frankly, probably more product to those countries than even what we're doing right now.
Scott, as we wrap things up this week, I don't think we can also skip talking about the weather. It continues to remain dry in much of cattle country. I want to talk a little bit about the livestock side of it, but that also there's issues with hay and supply issues there as well.
Yeah, absolutely. When you look at hay and pasture conditions, it's not very good in many parts of cattle country. You look at that drought monitor map, and there's way too much red correlated very nicely with where cattle rest. I think that's important for folks to understand the kinds of dry weather we have. We're going to have some longer term implications for cattle markets. And in some ways, the short run of that could be negative. We ship a lot more cows to market than we otherwise would have. That could be a drag on cattle prices for a while. But the longer term on that, frankly, could be positive if we make a dent in longer term cattle supplies. Just hay's been tough to come by. I look here in Missouri and I hear all kinds of stories about I have no hay left. I need to go find hay to try to get through next winter. And I haven't had a lot of growth. We had a very cold spring that became then a little dry with a lot of heat right away. And it's just been tough for hay and pasture growth in particular.
I was reading online about Nebraska, and there's some issues with quality and the availability of new crop. How does I know we talked about that early on about this could be one of the biggest issues for cattle producers this year. How do they figure that into their risk management plan?
I think that's the really toughest one right now, Megan, to be honest, because so it depends on where you are. If you're in a situation where you have excess pasture and hay available to you, do you look ahead and go, well, we may actually see some higher cattle prices longer term as a result of what I think is going to be liquidation in places like Oklahoma and Texas. It might be an opportunity for you, and you hate to say that it's an opportunity at the expense of other producers in the country, but I think you need to look at that. If that dry weather continues to expand, and we had some discussion going on here in the northern part of Missouri now about just how dry it is. I know we've got some rains in some part of that northern tier of counties in Missouri, but if you don't have enough hay, at what point in time do you make decisions in terms of culling that they otherwise wouldn't make, trying to limit how much hay you have to go find?
On the flip side of that, crop conditions continue to improve in much of the Corn Belt. Is that fairly good news for livestock producers as well?
Megan, I think it is. We talked a lot about the fact that we saw corn prices move up a lot since the first of the year, and I think when you look at the last few weeks, we've seen corn prices lose about 35 cents. As I think we've seen some better crop conditions. Some will say it's some of the better crop conditions we've seen in a long time, and that's really, I think, Iowa north and east that shows a lot of that. Although even a state like Nebraska, I think corn crop conditions look mighty good right now. That crop's far from in the bin, but I might come back and go, that might be a risk management opportunity if these prices keep sliding lower for us on the feed cost side as well. If we lose another 35 cents or so, that might be an opportunity to lock in some feed costs. So we are getting some help in what's otherwise a squeezed margin situation in both hog and cattle markets.
All right, Scott, as we wrap things up today, take a look at reports for next week. What are we looking at?
Yeah, so USDA is going to give us their monthly WASDE report next week. We'll also get a shot of retail meat prices and finish the week with some consumer confidence information.
All right, plenty to talk about next Friday. We will catch you then. Have a great weekend.
You too, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. You can also submit questions or comments there. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Megan Grebner on Brownfield.